Olá, seja muito bem-vindo a mais esse episódio da FinTrender. Um episódio especial. Hoje eu trago aqui o Gerard Smith, que é Head da parte de produtos para Digital Assets da Nasdaq. A Nasdaq é uma das principais empresas de infraestrutura de mercado mundial. Está presente em praticamente todos os países com a sua infraestrutura e provendo infraestrutura para esses mercados. Tá? Assim, é um episódio bem legal e muito interessante para a gente entender o papel de tokenização, de ativos digitais. Ele coloca aí alguns use cases bem interessantes aí que a Nasdaq está desenvolvendo. O episódio vai ser em inglês, mas se facilitar para você, você pode tanto colocar legenda aqui no YouTube, como até colocar uma legenda traduzida em português para facilitar você absorver esse conteúdo que é muito legal, tá bom? Vamos lá? So, Gerhard, first of all, thank you very much for accepting my invite to be here and to talk to me about these digital assets and the role of Nasdaq on that. So, I think the first question here, Gerhard, is that what's the role of Nasdaq in the infrastructure of the financial markets nowadays?
Okay, well, first of all, thank you for the invitation. Thanks for having me on the channel. Appreciate it. Nasdaq, I think most people around the world know Nasdaq for operating markets in the US. You may not also know that we operate markets in other places as well. So we operate markets in the Nordic region, and we also operate markets in the Baltics as well. And that's not just kind of trading markets, that's also doing clearing of those markets and settlement in those markets as well. So that's probably what people know Nasdaq for. But another important part of our business is selling our Nasdaq technology around the world. So whether it be trading technology, clearing technology, risk technology, settlement technology, and now digital assets as well, we sell that technology to mostly financial market infrastructures. So we provide technology to over 130 marketplaces in more than 50 different countries. And obviously, people trust our technology because that technology is central to market stability in those places. So it's about integrity and trust in that technology, making sure that the technology that we use for our own markets is also as robust for other markets as well.
Okay, great. I didn't know how embedded this technology was around, let's say, the global financial market. Can you give us an example of any, let's say, exchange or bank or whatever institution that uses the technology around the globe, Gerard?
Well, you name it. So especially if we look at Asia, the Hong Kong Exchange uses our technology, Australian Stock Exchange, Singapore Stock Exchange, and then in South America as well, in Europe, the SIX Exchange in Switzerland uses our technology, Germany, virtually every country, you can name it, there is some kind of Nasdaq technology embedded in that market infrastructure.
And that's really good because that's really a thing. I think that's scalable in any currency, right? In any country, because it's more or less the same idea, right? The settlement and the negotiation of these assets, right?
Yeah, market infrastructures tend to work obviously it's different depending on the asset class, whether it's equities or bonds or derivative products. But, more or less it's the same kind of infrastructure. If you're trading a security, then you have obviously the exchange technology. Typically that goes down into clearinghouse, but not always. And then onto the CSD where the change of ownership takes place against cash. So in terms of provision of that technology, Nasdaq can provide the whole stack. And sometimes we do provide the whole stack to a market infrastructure. Sometimes it's just the trading technology and they have other arrangements for clearing and settlement, or sometimes it's settlement but not the other parts. So it really can, the way in which those market infrastructures are set up and the way in which they operate to typically kind of global standards mean that the technology can be integrated with our own technology or other vendors as well for various APIs or standard messages and whatnot.
Okay, I see it. And from your perspective, when you're talking about this infrastructure, there's a lot of discussions on how blockchain can change it or can be better than what we have now, or this kind of discussions. How do you see the role of blockchain And how is it developing in these markets?
Well, first of all, you need to kind of like look at the definitions, right? So a lot of people use the word blockchain when they mean DLT, and they use those words interchangeably, right? So it's important distinction to make is like, you know, the blockchain part versus the distributed ledger technology part. So you can have DLT but without blockchain, and you can have blockchain without DLT. You can have both together, or you can have none but still have a kind of digital asset concept for things. So, you know, there's obviously, if you put DLT together with blockchain together with smart contracts, then obviously that's a different way of operating marketplaces. And well, it doesn't need to be marketplaces, could be trade finance, could be logistics, etc. as well, right? So, and there are obvious benefits. I mean, in terms of DLT, if you have that kind of a truly distributed network, then obviously there's no reconciliation. You can redesign your business processes using smart contracts to become more efficient. You can effectively look at your marketplace and start from scratch, and try to rebuild it in a more efficient way. But obviously,
go ahead.
So obviously, when it comes to DLT, people think of DLT with respect to trust, right? So if you're a trusted operator of a system, then obviously the case for DLT diminishes somewhat. But there's still a case for smart contracts, and there could still be a case for blockchain. So it very much depends on the type of use case that you're looking at as to what are the combination of those three things you should put together to get the benefits.
Yeah, but from our perspective, in the case that you are seeing being implemented in the last years, or that will be implemented in the soon future, is it like a different infrastructure that's needed, or it's kind of you see that as an upgrade of the structure that we have now?
Again, it very much depends on how you're going to do that implementation. The devil's always in the detail. So you can decide to stand up that technology to replace a whole marketplace, in which case that's going to be a huge project and involve many different parties. Or you can still use that technology but start to implement it in kind of a more tactical way. So many firms or market infrastructures might want to simply start using that technology, get their people trained on it, realize some of the benefits for internal use cases before rolling it out much more generally across their organization. So I think there's a great deal of that type of implementation going on. And we don't hear so much anymore about large-scale implementations across market infrastructures.
Okay. When you're talking about this thing, you mentioned the discussion about smart contracts. So smart contract for me, it's a concept that's really associated with a DLT or a blockchain. But I kind of guessed here that you kind of segregate that you can use smart contract in systems that are not DLT and blockchain. Is that it?
Yeah, absolutely. So you can use smart contract. You can deploy it on a DLT, but have an underlying database that's not blockchain. Or you can deploy it on a DLT, which consists of a single node, which is obviously not very distributed, and have a blockchain underneath, or a traditional database underneath, and you will still get some of the benefits of that smart contract, right? So the smart contract is about better kind of defining the object and the characteristics and the attributes of a security, for example, and having those contained within the object itself. And there's obviously some benefits to doing that, but you get the benefits, but without having the what can sometimes be kind of like a big infrastructure challenge to deploy DLT to many nodes, to many customers. Are they going to be nodes that are distributed in their data center, or are you going to manage the nodes? And then deciding which blockchain technology you want to use. So it's a complex picture sometimes.
Yeah, no, and that's an important point that you said that was not really on my radar, because it's you can have let's say all the advantages of a smart contract without having the DLT and blockchain. So that turns the thing much easier for you to implement as in a system that is already there. It's working for some years, and that's you don't need to rebuild all the systems in order to have that implementation. That's really powerful.
Yeah, and obviously, if you implement it in the way that you use smart contracts, but you decide to, you want to use DLT, but you want to take it step by step, and you're not sure whether your customers want to take a node into their back office, well, you can say, okay, well, let's go with an implementation that's a single node, and then let's move at the time that when our customers are ready. So you can start distribution of nodes if you want to, and if your customers are ready to take them. So there's many moving pieces in this puzzle that market infrastructure firms in particular need to be careful to take the right steps at the right time.
Yeah, that's not an easy decision to make, right? As the things are really moving faster than we expect at the least. So when we're talking about this, there's another discussion that comes in parallel, which is the discussion of tokenization. So when we're talking about blockchain and asset tokenizations, there's always this tokens that are really, they started on the virtual market, let's say, virtual, like, let's say, Bitcoin, Ethereum. They are, let's say, digital by nature. They started digital. But there are also the discussion about tokens or assets that are not really digital yet. They will be tokenized, if I can say that word. But how do you see this thing? Is there a need for tokenization of all assets nowadays?
Oh, that's an interesting question, and I think I'm going to say the same thing again. It very much depends on what the business case is and how you deploy that tokenization, right? But you're right to say that typically we think of tokens as something that is perhaps a new asset type. So it could be, I don't know, the one that we're working on at the moment at Nasdaq is carbon credits. So for voluntary carbon markets. So that's a new asset type, right? So it kind of lends itself nicely to tokenization use cases. But we can tokenize many things, right? So there's also initiatives that we're looking at in Nasdaq around the tokenization of government bonds and corporate bonds. Then there's the other types of new asset classes. There's things like we could tokenize music royalties. We can tokenize real estate. We can look at private equity markets, private debt markets. So there's really a whole range of topics that we can address with tokenization. My challenge working here in Nasdaq is to figure out which use cases we think should be prioritized over others, and which use cases our clients are asking us to develop for them.
You are saying that you put in a system that's really agnostic in terms of asset class, but it cannot really be agnostic in terms of the country or the let's say the company that's issuing that, right?
Yeah, no, I agree. That's absolutely the case. So it's asset agnostic, and you can decide to deploy different types of asset classes on that. And whether those asset classes fall under regulatory regime, like voluntary carbon market, there's no regulatory regime for that. There is various standards and audits and governance around it, but there's no regulator of it. So in that case, you can go ahead and
implement that with no issue with the ruler. Is there any region specifically that you are going for this unregulated carbon? Because I know that there are differences between let's say the carbon market in, let's say, in Brazil, South America, and other places.
Yeah, so it's truly global. So we've sold our trading technology for carbon market in Singapore. We're working at the moment with a registry in Finland, and then we see opportunities around Asia and South America and other places for. Sometimes it's kind of a mandate from the government to stand up a voluntary carbon market, and sometimes it's kind of like a carbon market which is more global and in that it will operate sort of carbon credits for projects all around the world. So it very much depends, but there's definitely opportunities for us there to use our technology to bring that kind of integrity and robustness to those markets that you would expect from a Nasdaq product.
Okay. Besides this carbon market, is there any other market that you see a lot of demand for tokenization?
Yeah, so we're having various different discussions. Government bond. We have so central banks and CSDs obviously talking about issuing their government bonds, either wholesale, driving towards digitization or tokenization of those bonds, or doing it on a kind of step-by-step kind of way. So we're working on an initiative on that one in particular, which will use the same product that we use for carbon markets, because, like I said, generic functionality, but then tailoring it to. So the specific thing that we need to watch out for in each implementation that we do is obviously the payment leg of moving these tokens around. So obviously, typically we want them to work in a delivery versus payment method, and obviously every jurisdiction or every initiative you look at is going to have slightly different way of doing payments. So that's where the kind of implementation details come in. It could be central bank money, it could be commercial bank money, maybe a stable coin, for example. But
just jumping into this discussion, Gerard, how do you see the role of stable coins on this market?
This is a personal view, so not necessarily one of Nasdaq. So I don't think that stable coins will be around very long, so long as CBDCs are starting to be implemented. So I think when you start to see implementation of CBDCs, I think stable coins will fall away. I don't think there's much case for a stable coin if you can settle central bank digital currency against whichever asset you're moving around.
Okay. Yeah, because that's one of the things that I studied a lot, and it's part of my PhD, stable coins and also CBDC. So
I'm talking to the expert.
Yeah, no, but I think that's, as you said, we are talking about a lot about the tokenization, but we need a currency that are on the same level, right? That you can do smart contracts on the currency level as well, so we can just do atomic swaps and all this liquidation that without, let's say, a stable coin or a CBDC or a currency that's tokenized, we can say that in general. It's there's a lot of use cases that a token cannot apply if you don't have the, let's say, the currency tokenized as well. So it's difficult to see. I agree with you that it's difficult to see now whether it's going to be a stable coin or CBDC. I do see your case on the CBDC. If the CBDC is really widespread and they have the risk, there's no reason for another credit risk that the stable coin will always carry, right? So that's a fair point. But my point is that I see that you have a lot of infrastructure, a kind of agnostic system that you are implementing, but it's also really related to the location or the, let's say, the company that's doing that, right? So you are kind of providing the infrastructure for them to do that on a regulated way for the governments and anyone else. So, but one of the discussions that we have on this new technology, that's really a kind of a global technology. How do you see this implementation that we are doing in a way that it can help the world to be more globalized in terms of the financial system?
But I think the technology that we're deploying specifically is private networks. So we're not using public networks on chain in order to power our technology. So if you think about who our customers are, it's typically market infrastructure providers, so exchange groups, clearinghouses around the world, and I think it would be difficult to persuade a clearinghouse or an exchange group who is a highly regulated entity to put their business onto public blockchain, where they can't guarantee the robustness of that.
Sorry, go ahead.
Yeah, so it's always going to be for those types of entities a deployment onto a private permissioned blockchain for them. And then the question that you said is like, how do you globalize financial markets? Well, then it comes down to, well, how can you facilitate the interoperability where two entities want to get together and sort of like, I don't know, settle currencies across time zones, for example. how do you solve the problem of, well, that entity is using this type of network and the other entity is using a different one. Well, that's where kind of interoperability and various different plugins and sorts can be developed in order to facilitate that, so that we can still join different networks up to still get the benefits of that technology. So it's not an insurmountable problem.
Okay. I see from our perspective, as we are deploying that, let's say on a regional base or in private networks, custody is not really the issue, right, Gerard? Because they are under the let's say the person that's controlling this system. They are doing all the controls on it. Do you see any discussion on that when you're talking about tokenization? Is it an issue for any of the clients that you are talking to?
The fact that it would be on a private network.
No, the fact that the custody. But every time that we are talking about this new technology, custody is always a thing that comes to the mind, right? So that everyone can. The technology allows, at least the blockchains, the public blockchains, allows you to control the custody of your assets. I understand that it's not the case here because you have, let's say, a private networks, okay? But is this the discussion that pops up on the discussions on tokenization with some clients?
Not the kind of discussions I have. So the discussions I have are always around private networks things. So probably not the right person to ask that question. But you know, I know that.
Yeah, because there's a point that always comes to mind. But talking about the assets, the tokenized of assets, you talked about the carbon credits. You said about let's say the government bonds. At the beginning, you said about real estate as well, right? So it's a massive amount of money that's there, and there's always a case for tokenization of real assets. Since I'm looking at this market like several years ago. But it's developing very, very slowly, I see. How do you see the development of the tokenization of real estate?
That's a interesting question. I'm not sure I can give you a good answer to that one. But I think it's much more likely to develop in places where they have a particularly dynamic real estate market, where there's a lot of kind of development going on. So that might be more in, let's think, Middle Eastern countries, for example, or countries where there is a dynamic estate industry, or one that's really buoyant. And of course, the idea is that you enable people to buy into either commercial property or private property, which will, for the benefits of kind of investment in that property. So to see kind of like the value go up over time, but also to realize some kind of incremental income from those properties. So it could be a hotel that you buy a part of, for example, or it could be a shopping center or something. So the way in which that's done, I think it can be tokenized pretty straightforward to do that. But obviously behind that, there's an awful lot of legal contractual work that needs to be put in place before everybody gets happy with how that's going to operate. And of course, as we're the guys that supply the technology, we can't do all of that kind of business case and legal stuff for you. So we come at the point at which you're ready to implement that stuff.
And that's a good point that you mentioned, because the technology is there, you can provide that, right? Yeah. So as you said, you have an asset agnostic platform, so it can be whatever token, most of the token that people think about, but you have all the legal discussion before that, right?
Yeah, absolutely. And you have to build yourself a business case, right? So who's going to issue the tokens? Who's going to contractually stand behind these tokens? What is the risk of default of the issuer or of the project or whatever? So all of those kind of things have to be thought through by the people that want to launch that type of business. And I think sometimes there's a expectation that if you tokenize something, that you're going to make it more liquid, right? And that you could start trading that particular thing. Now that's not necessarily true, right? You don't create liquidity by tokenization, but I think it helps. It certainly helps to create or facilitate and enable secondary market trading. But there's lots of pieces to that puzzle to make a kind of successful tokenization business of whatever asset class you're thinking of.
Okay. Do you see a case for tokenization as an inclusion case for the people that doesn't have a lot of money to invest in assets that nowadays is not available for them?
Yeah, certainly, absolutely. The technology definitely enables that. So I've seen use cases of certain exchange groups looking at gold, for example. Instead of buying an ounce of gold for, I don't know how much it costs these days, £300 or something like that. You can buy fractions of gold and get the benefits from that market, and other use cases as well. So the music royalty one is an interesting one as well. So typically, an artist or a music company owns those royalties outright, but they might want to kind of sell those royalties, and people they typically have a steady return on them, which is not correlated to financial markets, interestingly enough. So that one's an interesting one as well. So there are a number of use cases around that.
Yeah, no, that's great. So you are based in London, Gerard, but you see a lot of cases around the world, right? So do you see any big difference between the adoption of new technologies or the aim to implement these new technologies that you have, let's say, between Asia, South America, United States, Europe? Is there a big difference, or they're more or less aligned nowadays?
No, I think I don't see many differences at all. We see differences by region in terms of what they're thinking of, in terms of how they're approaching digitization of their markets, but everybody is pretty up to speed on how that technology works and what they want to achieve. So, yeah, there's always important conversations you have to have with the client around how we're going to implement it, how are you actually going to deploy it. There's conversations that we started with where you need to say to your client, okay, if you want to go DLT, then what's the distribution of your nodes look like? Are your customers taking them? Do you want to use blockchain? Do you want to use central database? How's it going to look? So there's those kind of discussions, but everybody's pretty clear on how the technology will be of benefit to their business. So they've built that business case, whether it be like a P&L type business case, or whether it be kind of like we want to start the journey onto tokenization, digitization, because that's the future. And we want to get moving in inserting this technology into our stack. It could be that type of business case too. So, but people are typically very clear on what they want to achieve.
Okay, great. Is there any particular case that it's related to, let's say, Brazil or South America that you can mention?
Not that I can mention, but yes, okay. There are.
There are still working.
There is definitely work that we're doing on government bonds. There's definitely work that we've been doing on carbon as well in South America.
Okay.
Yes. So what's the space?
Okay, great. We're gonna look forward for some communication on that.
Yeah, sorry I can't tell you, but if you give it another 6 months, maybe we can talk about it in more detail.
We can arrange that. You come back in 6 months and just explain what's going on, because I think that's a thing that doesn't stop here, right? It's like innovation and implementation of systems and all this new infrastructure that it's upgrading all the time, right? So it's not really, you cannot just say, okay, now it's fine and that's it. So you always need to change, because the market changes.
It's a constant journey, and one of Nasdaq's kind of strategies is to try and move markets into the cloud. So in that way, our customers that put things into the cloud benefit from the fact that as Nasdaq, we're constantly upgrading our technology all the time. So if you take those services as a managed cloud service, which we're actually running and operating on your behalf, then you get the benefits of Nasdaq's technology upgrades and roadmap as you go along, kind of like as part of the package. So yeah, that's another thing we're keen to kind of promote.
Great. Thank you very much. I have more or less one time that I have for the interview here. So we reached that. There's a lot of information that you gave here and a lot of good thing. I would like that you leave, let's say, a final message and your contacts also for the people that want to continue this conversation.
Final message. Okay, so I guess we're really excited about the fact that customers are taking the journey onto digital. So what's the space in terms of Nasdaq technology being used around the world for digital asset issuance, tokenization, settlement in various different use cases, and it's an very interesting space to work, and I'm grateful for the opportunity to tell you about it.
Great. And about your contact, if you let me, I'll get your LinkedIn profile here. Just put it in the description. So if someone wants to continue the conversation with you, they can reach you there. Okay.
Perfect.
And thank you very much. And I just take a note here that in 6 months' time, we're going to be again here so we can explain this new projects that you are dealing with.
I look forward to it. Thanks for having me on. It's been a great to chat to you.